Welcome to Mentor Club. Andy Tanner here, and I'm joined by Noah Davidson. How are you, Noah?
I'm fantastic, Andy. It's a beautiful Monday morning here. So
It's gorgeous. We're going to get snow tomorrow, but we'll enjoy the sunshine today. It was in the 50s yesterday.
I know
It's
it was
spring.
nice. I
Spring is
got a little
springing.
suntan on. Yeah.
Yeah, spring is springing. We're going to talk a little bit about um, what we do here, which is education only. And we don't give financial advisory services. In fact, I don't like the advice culture at all. I mean, if you want to get advice, go pay for it at Wall Street and they will take a cut. But that's everyone's choice, whether they want to learn to do things. You know, Financial education, you might look at your life and separate skills in two categories: skills for hire and life skills. You could hire someone to tie your shoes or drive your car, or you might say they're life skills, or you might be foolish enough to try to do your own root canal, but that might be a skill for hire. So it just sort of depends on what type of life skills you want to have. I think for me, I like having a team to advise me, but I look at me as the ultimate decision maker. I like having money as a life skill. Doesn't mean I'm automatically perfect at it, but that's the one I feel. We're going to give examples today of assets, stocks, options, transactions, stuff like that. Um, so don't think that those are stock picks. They're just examples of what we can learn from in this case. And then we don't warranty any pick. I can buy some crypto and I have no idea where it's going to go. Like none. I have opinions, but I don't
That makes two
know.
of us.
Yeah, I
So
don't know anything. I don't know where Bitcoin's going to go, so it involves risk. All this stuff, I don't know where it's going to go because it involves risk. And so with that, let's hop in.
yeah. So let's start out with the S&P or the Nasdaq. I've got the futures watch here.
Look how
But
organized
I
your
like.
watch lists are.
You should see what I've been doing to the portfolio. I've been
I'm
doing a lot of
telling
little
you, it's
organization, and
just
I've been organizing it by strategy for the most part.
looking good.
And part of that's just because I've been working on teaching credit spreads in the adjustment and repair playbook, and that's been a lot of fun. But it's also just part of what I've been doing with the broad market. And the market got volatile, and we went from having a focus where we had a really strong directional bias,
Yep.
and now we've kind of neutralized the delta. And we always focus on cash flow and theta, but I've been bringing the delta down in the portfolio just because of that market volatility. And so, Nasdaq's down underneath its 200 period moving average. You got a little whipsaw volatility going on. Boy, last week's sell off. I think the inflationary numbers came out and the market started selling, a little bit of pressure. Friday was a big down day. Today it's kind of holding its ground. The S&P looks about the same if we were to pop open the S&P, and it's down a little bit off the open, but very, very, good size sell off, uptick in volume to the downside, reviolated that 200 period moving average. And it's, still in an area where we could see it stabilize, but I'm just expecting volatility. Like I have no idea which way this market's going.
No, nor
The
does
Fed's
anyone.
talking
No one
about
does.
making sure that they um, bring that inflationary target into check, and they're committed to that. And I think that they might get aggressive on rate hikes. Who knows? Who knows what they're going to do, and even more importantly, who knows how the market's going to respond? So I'm not quite sure about that. Broad market, a couple things that might be worth noting here. The volatility index popped back up. It's up above 26 again, which means option premiums are getting a little steep, and the fear gauge is back up. Not as high as it was last two times, but it's just a couple days into that. Uh, let's see what else is cooking here. The Russell 2000s kind of got this little bear flag type pattern forming where it broke down its big channel and shown some signs of bearishness. Gold popping up. We're seeing a little activity out of the
Interesting.
gold.
That's
And then one that's been interesting to follow, Andy, is oil. Price of oil was kind of shooting up, and it's out there at like $93 a barrel right now. So we're seeing some upward pressure in the price of crude light. And then this is a broad market indicator that I've used for years that you've seen me talk about
oh yeah.
before. It's called the Archipelago is the name of the big clearing network. And we've got and it tracks about 7,000 stocks that clear off of that ECN, electronic clearing network. And this is measuring AR high 3 months. It's tracking all the stocks that have made new highs over the last 3 months, minus the AR low 3 months. And you can actually see the ticker symbol up here. Let me highlight that. If you'd like to duplicate that, it's $ ARHI3M minus sign, and then you got $ AR low 3M. You can pop that in, and what it is tracking is stocks that have made new highs over the last 3 months compared to stocks that have made lows over the last 3 months. And whenever it turns negative, that's a sign that you have more stocks making new lows over the last quarter. And we don't want to really put on a bullish posture until we see that turn green. So I like to see that get up above zero and start ticking above positive 50, positive 100. Right now it's showing negative 83. That literally means that there's 83 more stocks making new lows than there are stocks out there that are making new highs.
That's a really cool indicator.
Yeah, it really is. And it's been very, very useful over the years. And every once in a while, it whenever it moves red, it just gives you a good warning sign that the market sentiment has shifted short-term bearish. And it can, during a sell-off get, quite a bit red. But we don't go back into a bullish posture for the most part until it turns green. And I like to see it get up above the 50 mark. And my preference is to get it out above 100 stocks that are making new highs. And so we keep an eye on that. And the market, in the last little bits, it showed a little bit of life. But it's been, for the most part, bearish, down below the zero line there. So we still have a lot of our positions in the portfolio hedged, and I collared some of the stocks and just left the collars on, even through the rally. Didn't try to overmanage them because I wasn't sure what was going on with that volatility. So, because this is the kind of a full contact market, and it's yeah, I mean it really is, and it's really tough sledding out there, and there's two approaches I've discovered over the years when the market gets volatile like this. The first approach is you get defensive, you try to neutralize your portfolio, collar your stocks, kind of batten down the hatches and just ride it out. You try to reduce your bullish exposure. And then once you've gotten your portfolio kind of taken care of and neutralized as best you can either A, shorten your time frame and become more of a day trader type, which is a lot of work. It's a day job. Or B, you can start doing less directional strategies or stay out of the market. You can, of course, stay out. Like cash is a position and sideline's a safe place to be.
Yeah.
So what we've been doing is we've been shifting the portfolio to where we've been writing bull put credit spreads way out of the money, bear call credit spreads way out of the money. I've been legging into condors and focusing on the time decay and cash flow. And again, like most of the stock positions are just neutralized where we have them battened down. So what you can see here is I've kind of got the portfolio broken down by strategy. So I've got iron condors, bear call credit spreads, bull put credit spreads, got a couple of broken wing butterflies, a couple of long calls and things that I'm trying to leg into spreads, some adjusted spreads, a couple short strangles. Then I have some stocks that are positions that are just unallocated. I haven't organized them into anything. This is where some of our core stock positions are. But overall, just been working on building up the theta and focusing on more neutral strategies. So, right now, our bear call spreads are working well because the market turned bearish for us.
Yep.
And we got some, decent little profits cranking out of that, and then, that's pulling in for the money allocated. We're pulling in a theta of 30. I've got some bull put spreads that were pretty profitable until the market turned, and I'm in the process of adjusting those or hedging. Most of them are fine, but I've had to adjust a couple of them. And this one's, the theta's cranking out at 53. And then I've got a handful that I've just neutralized into condors. And
With your
these have,
type
yeah,
symbol to build your mini risk graphs. I mean,
yeah,
wow,
you like that? I got a little creative there.
not around anymore. Okay.
Yeah. So, and just kind of keeping track of things, because we've had so many positions on, it's been tough for me to recall what I put on the trades other than my notes. So this just organizes it, and that's all under the kind of the new layout. You can create groups and symbols, and like I could come down here to the unallocated stuff, for example, and say, Apple, I'd like to go move to group, and I can create a group, and I can add a group, and I could call it, collared stock. How do you spell collared stock? And then that I can create that little position. Then typically, sometimes I have to actually, there it is up here, collared stock. And so I'd have to go move all of the Apple positions into it, but we've got stock with a collar on it, and it's should be relatively well neutralized. I do have a defensive hedge on the portfolio at the moment, Andy. I took my kiddo up skiing last Friday,
Yeah.
and I set a sell stop to trigger if it went below, if it started to clear these candle lows.
Mm-hmm.
And so we do have a portfolio hedge right here, and then there it is right there. It's a negative 50 delta. We're not completely hedged. I don't ever put on a full hedge until the market really starts breaking big support zones. So our net delta, I'd have to move some stuff around to get it to show up right now. But we've got a negative 50 delta hedging the portfolio, and we need about 75 to hedge the whole portfolio.
So you're about three there, 2/3 there.
Yeah, 2/3 of the way there, and that's just one contract on the ES. And I just put a sell trigger on there, and I didn't know the market was going to sell off that big on Friday. And when it did and it violated, it put in and triggered. I might have put it below the low in the 200. I can't remember where I put the trigger.
The 200's a popular place. If you look back, it's kind of a weird chart pattern. I don't get too much into the history repeats itself tea leaf stuff, but if you look at COVID, where that's really the last time we broke our 200 day was March.
Yep. There it is. I set.
Oh, go ahead.
Sorry. I set the trigger below the low and below the 200. So that's where it triggered. That's where it hedges on. And as you were saying back in March,
you can look at it. You can look at us break the 200. Yeah, that's probably would do it. You see us break the 200. I don't know if we can make that big. Let's just make that area big right there.
Yeah, hold on.
Yeah, that'll work. So we have something eerily familiar. We break the 200. We go back above the 200. And then we fall back down below it for a big, long slide.
Yep.
I don't know if we have the same big, long slide, but we, broke the 200. Now we went back above the 200. Now we're back below it. It's eerily familiar.
Yes.
What happened there? I'm not saying we're in for a big slide. I am saying that I am less afraid of a pandemic than I am of a loss of confidence in the dollar and a loss of confidence in the Federal Reserve's ability to manage. I was doing a podcast, and I bring in on all kinds of different, PhDs and smart guys that are way smarter than me, and economists, but a lot of guys that actually, trade funds. They're not just academic. They trade. They're in the thick of it.
They do it,
yeah, they do it every day with billions. Why trade billions when you could trade millions? but it's it's interesting how they. I was speaking to one of them, and I said the force of deflation versus inflation hitting each other right now. The arm wrestle of those two, the massive, massive deflationary pressures in the market versus the massive, massive inflationary pressures of the Fed's policy, are amazing. And well, I think what it does is we talk about the Wizard of Oz with his levers and dials. The Fed trying to get stability in this. I think the slightest turning of policy can really hurt things now. In other words, it's very
Hmm.
sensitive. The dials are very sensitive, and
Yes.
coming up in March, 2 weeks, they've kind of said, well, we're gonna start to taper in March, but they didn't say how much or when in March they would do it. And so I think the market is probably a lot like we are, is wondering what they're going to do, and that will probably determine the fate. And so a stop here or a hedge or a combination of the two things you talked about, being a little less directional and a little more uh, neutral, combined with maybe some possible hedges if we break certain levels, might not be a bad idea.
Yep. So who knows? I mean, the stuff I've been seeing this week is that Feds are committed to their inflationary target, like trying to bring that inflationary target down because the numbers are out there. I think people are feeling it. Like more and more people are becoming acutely aware because
Yeah.
it's hitting them in the bottom line. Like they can feel it when they go to the grocery store.
Yep.
And it's certainly a concern. It's probably the number one concern out there when they poll the people about politics, and I don't really like politics much, but though people are feeling it out there. And I think that whereas before the Feds were committed to keeping that market propped up and trying to keep the economy running, I think now they might have overcorrected a bit, and the inflation it feels like the arm wrestle's tipping towards the inflation side.
Yeah.
And so if they start raising interest rates, again, who knows how fast or how many times they do that this year. I think the market's just a little concerned about that, and more so than anything, I think the confidence in the idea over the last several years is the traders have been very confident in what they've been calling the Powell put, which is just the Fed's backing every time the market dipped, they used accommodative language and maintained accommodative policies, which kept the market roaring. And we've talked about how that created asset bubbles and caused prices to go high, and valuations are quite high now. I think that they're more the market sentiment, and from all the headlines and articles and from the talking heads that I read, is that the inflationary concerns have kind of put the confidence of the Feds being accommodating on ice, and that they're thinking that they're going to see the rate hikes, which will probably lead to a bigger market correction.
When there was
So
a site that we used to look at, I mean, I don't trust it necessarily. It's more for interest. But I felt like there was a website that we would look at years ago that got everyone's opinion on what the percent chance the Fed would raise rates on. You remember
oh
that
yeah, what was that, Fed Watch or something like that? I can't remember the name.
was?
I'd have to. Yeah, they used to give you like what they thought the Feds were going to
Yeah,
do, and
yeah, something like that.
oh yeah, I cannot. Yeah, that was.
The
I'd have to
heck,
look that up.
I can't remember what the heck that. It seemed like it was the CME, wasn't it?
Yeah, CME Fed Watch.
Well, the Mercantile. I can't remember
You've
what
got
it
you've got better memory than I do. I think
was.
that is it right here. Okay,
I do
so it's the
not.
CME Fed Watch tool. Okay, so
Look at you.
I googled CME Group Fed Watch, and there it is. Um, so let's see here. Current rate, target rate. They believe it's going to be up.
Half, probability 60,
Okay. Probability 34.3% that it's going to go up towards
a quarter.
30%.
No,
34.3.
that's the probability. if you look at the target rate, they're saying that we think there's a 34% chance it'll be between 25 and 50 basis points. They think
Uh-huh.
there's a 7% chance of it going up to 75. Is that right?
Okay. Yeah. Yeah. 50
Oh,
to 75 basis
right.
points. Yep.
So they're betting on a big, and generally the Fed will do it in quarter point increments. They're seeing a half point. They're saying the preponderance of people are thinking half point from
Yep.
what I've
And
done.
you can all find this if you just Google CME Fed Watch tool, and that will pop up the URL for that. Yeah, well, I haven't looked at that in a long time, just
I
because
say
the Feds haven't changed rates in so long.
it seems like, seems like a long, long time, but there's your 16th of March, and boy, will that be an interesting thing. Now, what
Yep.
that could mean is that it's priced in already.
Hmm.
People might have positioned themselves priced in. I don't personally think so. I think there's still people holding out hope. It's kind of rough. It is. It's kind of rough because if they start messing with this, asset prices are gonna fall, and that changes things too. Housing will change. Um, the stock market will probably change. It just makes it harder to do business. So what's
Yep.
worse, unemployment or inflation? Would you rather have a job and things are too expensive, or would you have things cheap but you don't have a job? And that's really the working man's dilemma, right?
Yeah.
Inflation. I mean, if we have inflationary periods, you've got a job, but you've got no money. Not you don't have enough money. In depression, well, you've got nice low prices, but you have no job. You have no money.
Hmm.
So that's your
Well, and I
shot.
and I believe the numbers are showing that the highest inflation rates in 40 years. But if you actually were to do the calculation the same way they did back in the 80s,
It'd be bigger.
it's the highest inflation rate since World War II.
Yeah,
So
that would be an interesting thing to bring up and look at that data, because they're always messing with this consumer price index always.
right, right,
And
and what they count and that, et cetera. Yeah.
just a tough time um, the work. It's a tough. The Fed. I don't envy. I'm glad I don't get up in the morning and work at the Fed.
Yes.
I don't like to be a fear guy. A lot of in the circles I wander in, there's huge amount of it's going to be devastating, blood in the streets. You can get into that apocalyptic type of thinking pretty quick if you get on the internet in the right places. But I do feel a genuine concern about inflation. That there's so much money out there that they're not going to be able to reel it in. I mean, for
Hmm.
example, let's say they even cut these rates. That doesn't stop the money that's out there on the balance sheets of the banks. In other words,
Right.
the banks have so much money at the Fed. Now it is at the Fed for now, but
Hmm.
but man, it's an interesting time. So anyway, holding pattern, neutral strategy. Get ready for stuff in March. Here we go.
Yeah. So
Reassure
Feds
pub.
must reassure the public that it will defend the target inflation
Well,
rate.
I mean, we're tweeting in caps here.
Yeah, it's all caps. Well, that's just whoever reported on it, but it may, more people like all caps, so they respond to it. But that's just a little Fed Bullard. Whenever he's talked a couple times. You got some FOMC meeting minutes coming up on Wednesday, and then the some of the CPI reports and retail sales are coming out. So retailers, those numbers will probably be important for folks.
Unemployment claims used to be red
Yep.
Thursdays.
Not as
They,
big of a deal anymore. So.
They're saying that's not a big of a deal. Let's just look at what that graph is on unemployment claims. We haven't looked at that graph for a while. I imagine.
Let's see
Oh, the
here.
Thursday.
Unemployment.
It's on Thursday.
Thursday.
Second one
That's
down.
Australian unemployment claims right there. Boom.
Look at that graph.
So let's look at the graph. Whoops. Zoom in.
I mean, we're not quite to pre-pandemic, but we're close.
Not too far off. So
We're close.
I think that those inflationary pressures are probably a bigger deal.
Yep.
And if you go back and look at last week's consumer price index, they were expecting 4% increase, and they got a 6% increase. And you can look at that graph, and you can see the consumer price index is popping up, and you're seeing kind of an average trend of higher. Sometimes you'd be up, down, but it's concentrated on inflation.
What's the other index that the Fed likes to look at? It's not the CPI. It's the I can't remember what it is now. I shouldn't even brought it up if I can't list what it is. It's not the CPI. It's not the PPI. It's the purchasers. No, it's the. Oh, I'll think of it. You keep going. That'll be not
the purchasing price index or the
PPI or the CPI. It's I'll look it up while you teach. Let's look. Right. Do you have any trades for today, or would you?
Yeah, I do. So let me show off a little bit of kind of what I got going on. I've got a trade going south that I thought would be fun to talk about. So I put on a bull put spread, Andy, on
personal consumption expenditures.
Personal consumption, yeah, okay.
That's
personal consumption expenditures.
EPI. That's the one. I sorry, I couldn't remember it, and then I remembered it.
Where do I find that one?
Oh, that's one of those special ones we go to the St. Louis Fed for.
Oh, okay.
Yeah, it's an interesting. Anyway, it's an interesting index that includes more stuff. I guess I should say. So,
gotcha.
Anyway.
So, bull put credit spread on Facebook, which I put on their post earnings. I saw their stock price dropping hard. I looked at their chart, and on the weekly chart, I saw all this old resistance back in here, and I thought, oh, it'll find some buyers down in here probably. So I built out a bull put credit spread down way out of the money, expecting the prices to rally. And I only got 1 day rally before the market ran out of gas and started running south again. Mm-hmm. And so this is what a proactive hedge might look like, and what got triggered this morning. First thing that got triggered is the credit spread's only down a little bit. I mean, the maximum gain was $310, and it's down about 115 at the moment. So it's not too dramatic. We're not way down here in trouble. So I was being proactive about the adjustment, and because it put in what to me looked like a lower pivot high and was coming back down towards the support.
Yeah.
First step I did is I actually put on the bear call credit, which doesn't take any new capital, but it brought in a little negative delta and kind of neutralized. So we brought in at the current price right here a little negative 13 delta. And because we already have the bull put on, our delta's running at about 19 right now just on the bull put. So by adding on the bear call, it didn't take any new capital because we already have the $2,500 tied up, and that's a $5 spread times 5 contracts. So that brought the delta down to just 6. And then I actually overhedged a little bit with a short stock position, because what I was expecting is if it kept trickling down and breaks this little support zone, I expected it to drop, but probably not below 200 is the big support resistance zone and the big fat number for it, and just feeling the downward pressure. And what I was trying to avoid, Andy, was the little psychological trap you get into on credit spreads, where if it drops down to 200, this little trade that was going to make $310 starts feeling about $600 worth of
Little pain.
drawdown down in that neighborhood. So you feel a little bit of pain. And so by adding on the bear call spread, we reduce that down to where, it only gets down to like 300 if it kept dropping.
Yep.
And then I put on a little delta hedge with the trailing stop just to neutralize that.
Now, ladies and gentlemen, look at the flatness of the purple line.
That's what I was after, was taking the edge off of the downside.
Downside flatness.
Right. So if it drops a little bit more, it'll actually put us into a profit because we'll be making more on the short sell than we'll be losing on the spreads. And we'll just close it out and walk away from the accident without a scratch on us, and hopefully we'll be able to rebuild another trade on it and recoup any expenses. Or the whole idea is to keep that pain from growing.
Yep.
And I'm probably a little overhedged at the moment. And I put that on based off of really what I saw on Friday's candle coming down hard. Yeah. And just put in a trigger to sell if it went below that candle, which it did. And so there's that trail stop kicking in behind it. And I made the trail stop the same size as that big candle there.
Whenever I see stuff like this, I'm tempted because it feels like it's on sale. Like you got $100 discount.
Well, and from the investor perspective, like Facebook's price getting beat up, and I've read a few things on Facebook, and some of their ad revenue being off and subscribers dropping.
I just don't, I would see this as on sale, but it's kind of like for me if I saw a Ferrari go on sale. Well, yeah, I don't buy it just because it's on sale. I'd buy it because I want one. And as I look this, I don't want one. I'm not bullish on Facebook at all.
I'm not either. It is on sale. Yep.
What's their moat? I mean, I feel like it's much less cool than it used to be. I just don't know that social media, they're certainly the giant, but I don't know if they're the future of social media. I don't know.
Well, who knows? And that's a tough one to predict. I think there's a lot of people who think that their meta transition to the metaverse is a bigger deal than maybe is yet.
Yeah, we'll see. Certainly a behemoth, no question about that.
Oh, yeah.
But I've seen behemoths die before, so we'll see.
That they have. So that's why I haven't been buying the stock. I've just been putting on credit spreads because I don't have to own the stock. I love
it for what we're doing because the premiums be so rich.
Right.
I love this for a trade. I don't like it for a purchase. I love it.
Right. And that's kind of what I've been focusing on is just trades, like cash flow trades where I'm not committed to owning assets. And I think there's going to be opportunities out there to buy good assets at a discount, but I don't think we're there yet.
No, we got to wait to see we don't know until we get a little more guidance from the Fed and get the market settled. I'm not buying anything, which might be why there's probably a lot of people that feel the same way. We're just not going to get a lot of buying pressure right now.
Agreed. They think that how many times have we looked at that Shiller PE ratio and seen it overvalued and had that conversation?
And the Shiller's probably down today. We won't look at it, but it's probably down today just because the market prices are down today. Earnings might be up, but prices are down. But for sure, I mean, the Shiller PE, in terms of, all that does is say how much we're paying for earnings. I just looked it up quick. It's like 36.
Yep, it's down a touch.
Just a titch. So anyway.
Yeah, so that's what I've been working on is building up credit spreads and managing and adjusting them.
I love the hedge, and we'll have to manage the bear call spreads if it continues to drop on us, and off we go. I love how you've organized this in the new layout with your little picture.
You like that? I couldn't figure out a better way to make those risk
rather ingenious.
Yeah. So for those who didn't catch it and just kind of pointed out, I gotten a little creative with the keyboard, and probably not as creative as some could get, but I put in the shapes of the risk graphs to, that's what a bull put spread ball, that's what
That's
the risk
right.
graph looks like,
Yeah,
right?
good measure.
So yeah, so it's giving me some ideas and just helping me organize the portfolio. And we still have some positions out there that, like I say, we've got kind of battened down. Like, this is just kind of random, but check out like AM's or AMD is a stock position we've had, and we've written quite a few options on it and the stock price just kind of got beat down.
Yep.
Down, up, down, and we've just been collared. We've been neutralized on it. So I just battened down the hatches, and we've kind of flatlined, and we've got a little bit of a drawdown on it, but we're keeping it neutral. So this wild ride of volatility down, up, down has not been that hard on us because we've been neutralized on it. We did the same thing with Apple, where we collared that and neutralized it, and we've got some Disney stock that's neutralized, and we rode it through earnings, et cetera, et cetera. Just kind of keeping the rest of that stuff neutral, and then shifting between bull puts, bear calls, and condors. We actually have a pretty neutral delta, so we're not really banking on the direction the market goes. And we're eking out some gains on those, and just these are stocks that we're heading down, like Targets. I got a bear call credit spread on Target that looks pretty good right now. And they're not huge position sizes. They're all pretty modest. And I have done a variety of position sizes.
I like that
But
for
yeah,
whoop.
so
Awesome. Let's I have so much smart home stuff that it talks to me all the time. I say something and my light switches talk to me now, and my phone tells me to
it'll do that.
stand up and all kinds of crazy stuff. Do you want to look at the Bitcoin stuff? People have you
Yeah,
got
yeah, let's do. Do you want to switch screens and look at that, or?
Yeah, I'll let me I'll take the screen. Let's see.
Okay.
Make the presenter, and you can tell me when and if you see my
I see
stuff.
it.
Let's do this from a standpoint of financial statement. So if you look at our financial statement, let's say we started with something like this. This is really interesting because we started with $56,000 is what I put in there to start with. Income, expense, asset, liability. And that money was not working for us. It was just sitting there. So that's where we started. And we bought a Bitcoin at 55,000 and had a thousand sitting doing nothing. And then from then we started generating premiums, right? So today we have some boxes, and I really, how I love to draw the little boxes like this that crank out cash. So this is what we've got now since we started doing this end of the year last year. If we look at what is in our stuff here, we've got 3,000 locked and 2,000 unlocked. So what does that mean? Well, that means that this 3,000 right here is a box. 3K, that's a box. That's one of these Jack in the Boxes. And that 3K is not making us a lot, but let's see how much it's making us for the month. That's going to be put. So let's put this. It's making us $225. So let's put that up here. So this is generating a cash flow of $225 for the month. Income, asset, liability, expense. Okay, the second asset that we have, if we come over here, get rid of this, is we have one Bitcoin. So let's put that in here. We have another box right here that is a Bitcoin. We'll put a B for that. And the Bitcoin is generating us, let's see here, a Bitcoin, right? The Bitcoin is generating us $1,700 for the month. So 1,700. is what the Bitcoin's generating us. The third
Nice.
asset that we've got is we have 3 Ethereum, and the 3 Ethereum is generating 240. So not the best on that one. So we'll just put in our E here. And that is generating us, did I click on it? I think I did. Click. Yeah, 240. $240. And if you add all this up, it's not much more. It's only at as far as the net worth goes. This is what I think is interesting. As far as the net worth goes, this would be asset minus liabilities is 56,000. Asset minus liabilities here. We've got $2,000 of cash that's not working for us. It's just sitting there. And so we have about $56,162.20. So we're up $162 total. Now, that's an interesting thing because Bitcoin's no longer at 55,000 where we started, and Ethereum is no longer at 3,500 where we started. But because we've been generating stuff, we haven't felt any of that. Like literally, in fact, not only do I mean, which one would you rather have? Which financial statement would you rather have? An account with $56,000 in it, or an account with stuff that's generating income? And what
Yeah.
I really like is we'll continue to, like, no matter what these prices do. And I'm not a fan of crypto for cash flow. I'm really not. I'm doing it because so many people are.
Right.
People are getting. This is where the education's important. You
Well,
can agree with me on Facebook, right? A person,
right.
Noah, but you, listener, might disagree with me on Facebook. Say, I do think it's on sale. Well, great. Use the strategies you've learned to get paid to buy it and manage that, right? See where you are on it. You may just love crypto. I like crypto as a hedge. What I think is most interesting about the most interesting chart we could look at as we talk about the crypto isn't crypto, it's gold. That's a more interesting chart to me because I think that's the same buyer. When the Fed starts to screw around, which one is going to be affected most? And I just think that gold chart's fascinating because the Fed is threatening to tighten, and we have gold on the rise. Figure that out. I
Yeah.
mean, that's really interesting. That when it's really unknown, maybe gold still has some some gold bugs out there like me. Maybe so.
Well, I think this is an interesting conversation to have just because so many people are getting interested in crypto, and they'll only be really doing so from the speculative side of things, where this
Yeah.
cash flow side of things. I mean, I don't know. We watched the Super Bowl yesterday, and every other ad was for not quite, but just about every other ad was for a crypto.
Yeah, I saw
And
Burrow company on the. I didn't watch much. I just kind of had it on the background
yeah,
to watch,
well,
but
Coinbase ran a commercial where all they did was they put up a QR code that moved
I
around
watched
the screen.
was. I said, yeah, that's a way to capture. It's pretty smart. That's a better
It was
chance.
smart.
It's
Out
a
of all the commercials, that was probably the smartest from a strategic
how
standpoint.
do you capture people into your database, right? How do you get
Yep.
connected with them and see whose phone and all that?
Yep.
So that was a pretty smart deal on Coinbase.
Well,
But
and I think that's a sign of adoption. Like if you look at like kind of that bell curve of early stage adopters and kind of peak adoption rates and then late stage adoption, I think we're heading into peak adoption. I still think we might even be in early adopters. It's kind of hard to say where you are in that
yeah,
curve where people adopt new technology. Um, but the buzz is out there and it creates a lot of interest, but you have a lot of uneducated people as far as their financial education goes. And they could be, very intelligent in every other aspect of their life, but if they don't have that financial education, they get interested in crypto space, and that from that point in time, it is just a speculation, and the I think what we're providing here as far as just insight, knowledge, information. I mean, it's a very volatile space, and I think the more knowledge you have, the better you're going to be able to participate.
Well, it'll be fun to see what happens with crypto. I mean, if it does come back to even where we bought it, we'll have a 70 plus $1,000 deal here. I don't know that it will. I mean, this has been fun to throw a little money in this and just kind of watch what happens just with one coin. It's been an interesting experiment. I've been having a lot of fun with it actually. I think chances are we're really close. We're at 294, and we're what, 10 days out. Is
Yep.
we might have a shot at getting something put to us right where we like it. We said we're willing to buy this at 3. Right now it's at 294. It's really close. So we might get a chance to buy this, and that would give us a fourth box to deal with, fourth one. So, and then we'll keep generating cash, right? As soon as this 2 turns into a 3, I'll do another one, right?
Yeah.
And it'll be interesting to see how many Ethereums we can mine in 1 year out of 1 Bitcoin. Like, we started with 1 Bitcoin that we just purchased, but we've been buying these Ethereums with the cash from the Bitcoins. So it's really, really interesting, or for cash from the Bitcoin. And so there's a real chance we can get a fourth one here. Wouldn't it be cool to get like 10 of them or 12 of them that we
Mm-hmm.
mine from premiums? So my Ethereum was my, in a way, to, I don't know how to say this, like the Bitcoin is giving birth to Ethereums. It's having babies for me.
Yes.
Is a way to think about it. The family's growing. The number of assets, the number of boxes that I can use to create a profit is growing. So
Oh,
it's a
absolutely.
fascinating thing. They're not as rich as, like, there's not as much premium as when we started. The premiums are settling. The spreads are still not great, and the liquidity still not great. But we're doing it. We're doing it. Hey, can I give you back the thing, and then can you look at the gold again?
Yeah.
What
Yeah. You bet.
I do monthly, just not that anyone would care, but I write puts on gold on the GLD every single month. Let me make you the presenter. Um, and I just hope to buy gold on a dip. I just hope to buy gold on a dip. And sometimes I get to. Most of the time I don't, because I write them pretty deep. But it's just a source of income that I like every month to say, hey, if gold gets down deep enough, I wouldn't mind owning it at a certain price. There's just a certain price where I say, hey, I wouldn't mind having a little bit of gold, I guess you would say.
Yeah.
What's
Well,
your
and it's been holding the price range pretty solid, and the upward movement in price, I think, is something you'll see every time confidence in other assets gets shaken a bit. You'll see a spike in gold. So
right? My
it's
my puts I've written are way down there. I've got puts at 155, which I don't know what that translates into real gold, but I'd say it's around $1,600. And I've got
yep.
puts 158, which is 1580 to 1620 or whatever it'd be. I don't know what it translates over perfectly, but yeah, that 155 line, you've got a red line right there. That's where
Yeah.
mine are. I'm willing to buy gold right there. So these are, you can see how long it's been since I've been able to buy some.
Well,
Interesting.
yeah, the cash flow builds, so I like it. It's solid.
Yeah, I bought some physical at coronavirus. I bought some physical when it dipped a little bit. But I mean, is that, I almost want to say, if you draw a line of the pennant. Do we have a breakout on gold if you draw a pennant pattern? Or are we getting
Oh, I
our
think so.
yeah, is that a breakout on the pennant? I mean,
You know what? Let's ballpark that. I mean, this is kind of the rough pennant that you're seeing, right? Like there.
that's what I'm wondering. Is
Yeah.
that that a
That
breakout?
is a breakout above the pennant. It has cleared resistance zone. So yeah, absolutely.
I'd say that's a breakout on the pennant. We've got another resistance zone to hit,
Right.
and got a bit of a
Well,
bear.
and notice the big uptick in volume on that. That's a
Yeah,
big spike, which tells me there's institutional involvement in that.
yeah. There's smart money,
So, yep.
or what we
So,
is smart money.
yep,
Yeah, who's
absolutely.
buying?
Well, we assume they're smart. Sometimes institutions can be dumb too, but that's
Well,
big money and they usually are well researched. So,
yeah, it's interesting. I won't get as much premium for my puts. Might have to raise what I'm willing to buy it at. But yeah, it's an interesting chart. Maybe 160 is the new place where I'm willing to buy at.
well, I think that yeah, at this point in time, you just write it down below support, and that seems to be a reasonable price point when you look at it from a weekly perspective.
You got all your fancy charting this tools now that
Oh yeah, I've got so many.
you've been playing around being nerdy on being one.
Well, what I'm looking for there is just big price volume levels. So the big price volume level for that whole consolidation area, the most transaction occurred around the 167 ballpark.
Mhm.
And so, I mean, and that, as you can see, as prices have oscillated around that point, this is what's called cumulative volume. And so cumulative volume, it's tabulating over the last 1,000 periods. And this is a weekly chart. It's the last 1,000 weeks, last couple of years. It
Mm.
gives you an idea of where the most transactions have occurred, and that would give you an idea of where the strongest reference point is. So if 167 is the big reference point, writing puts down at 160 is pretty defendable because so many people are using the 167 reference point.
Yep. Great
So,
men, dude. There's so much to learn. My goodness.
oh yeah.
My
Well,
goodness.
and there's always more to learn. That's why we're lifetime students, and that's why I think just that perpetual pursuit of your education. It's I don't think you ever finish it. You just keep pursuing it. So
Did you get your flowers for Valentine's?
I
Did you,
did. I got flowers and dinner reservations and babysitting aligned, and it's
wow, you're
important.
going.
I'd like to take credit, but my wife
Oh,
got the dinner reservations. I took care of the babysitting, arrangements, and then
where,
flowers are hopefully on their way.
where are you going to dinner? Where do you guys like to go?
I can't think of the name of the place. It's up at the mouth of the canyon. I think it's called Five Wives or something like that. I
Wives?
can't think of the
That's
name of it.
awesome.
Something
That's
like that.
awesome. I'm gonna cook. I'm gonna.
Oh,
I like
well,
to cook more than going out. I'd rather make. Man, I made the best. I've made it. I love cooking, man. That's one of my faves. Okay, my brother. Well, awesome mentor club. Uh, keep everyone keep your position sizes tight. Keep your learning going. Keep your paper trading. Keep things on paper, and continue to learn as we prepare for what I believe will be some big changes in the market come March. I think these will be major announcements, not minor ones. If we go a half point, that will be big, not small. So there you go.
right. Absolutely.
All right.
Okay.
Awesome,
We'll see
brother.
you on the flip side. Okay. Have a good one, everybody.